Hello everyone, welcome back to my channel Simple English Investing, and today we are diving into a world of finance and learning how to analyze a company's financial health and financial statements. Don't worry if you are new to this, we'll break it down step by step in simple English so everyone can understand. First one, understanding financial statements. First things first, what are financial statements are? Well, they are like a report card for a company's financial health. There are three main types: the income statements, the balance sheet, and the cash flow statements. Income statements. Let's start with income statements. This shows how much money a company made and spent over specific period, usually quarter or year. It includes revenue, money coming in, and expenses, money going out, resulting in net income or profit. Second one, balance sheet. Balance sheet gives us a snapshot of company's financial position at specific point in time. It lists assets what company owns, liabilities what company owes, and shareholders' equity, the difference between assets and liabilities. Third one, cash flow statement. Last but not least, very important thing, cash flow statement. This tracks the flow of cash in and out of a company. It includes operating activities like sales or expenses, investing activities like buying or selling assets, and financing activities like borrowing or repaying loans. Analyzing financial statements, very important process, and now we know what statements are. How do we analyze them? First one, ratio analysis. One common method is ratio analysis. This involves calculating various financial ratios using numbers from financial statements. For example, the debt to equity ratio compares a company's debt to its shareholders' equity, giving us insight into its financial leverage. Second one, trend analysis. Another approach is trend analysis. This involves comparing financial data over multiple periods to identify trends and patterns. For instance, we might look at how a company's revenue has been growing or declining over the past few years. Third one, comparative analysis. Lastly, this involves comparing a company's financial health performance to that of its competitors or industry benchmarks. This helps us to understand how well the company is doing relative to others in the same market. In conclusion, you have it. A crash course on how to analyze companies' financial statements. Remember, while these statements may seem daunting at first, with a little practice and patience, anyone can learn how to decipher them. Thank you for watching. Thank you for your like, subscribe, and don't forget to click the notification bell to see the next video update. Bye!